Hello students, welcome back. Today here we are with yet another interesting topic of business studies relating to financial management and financial market. We will be dealing with stock exchange of the financial market. We will define what is a stock exchange, what are its important functions, and we would also see what are the important features of a stock exchange. We know very well that stock exchange is a secondary market. It means it deals with, or here in a stock exchange, securities of second hand, or rather the securities which has already been issued by the primary market are issued over here, or they are traded over here. So if we are to define what is a share stock exchange, then we would be defining it as an institution which provides a platform for trading in securities which have long-term maturities. They are organized on a continuous basis, and they are well coordinated and regulated under the rules and regulations by the Security and Exchange Board of India, that is SEBI. Stock exchange, they are of great importance. The securities, they are traded over here under a well structured rules, regulations that is being framed by SEBI. Now if we are to define it, then there is a specific act which also define what is a stock exchange. As per the Security Contract Regulation Act of 1956, stock exchange, the term, it includes as any body of individuals, maybe a corporate, maybe a group, or it may be an association, whether registered or not, but they are organized with the purpose of this trading in securities listed in the official list. So as per the Securities Regulation Act of 1956, the institutions, associations or an individuals which are organized for trading in securities listed in its official lists, and they facilitate, assist, regulate and control the business of buying, selling. So in what way they trade? Their main function is either they assist, they regulate and control the business of buying and selling or dealing in the securities. This is the functions. So this definition is a comprehensive one. It defines what includes in a stock exchange. It may be an individual, a body corporate or an association of persons, as well as it also enumerates the act which it undertakes. It assists in dealing, it regulates the dealing and it controls the dealing. So that is the basic function of stock exchange. While facilitating the trading of securities, that is buying and selling, they either assist in buying and selling, they regulate buying and selling, as well as they control the buying and selling of securities. Therefore, here it is very imminent to point out that these all activities are done on an organized basis. It is well structured, well coordinated, and they are carried over a specific place. These stock exchange, since they are well structured, now it means they goes by or they act by the rules and guidelines that is established, that is laid down by the SEBI. And these acts are performed at their specified location. So this is all about stock exchange. They are under the purview of a secondary market, whereby the existing securities that has been already issued in the primary market by the business houses, those securities are traded over here only after they are enlisted in the stock exchange. In a stock exchange, when we would learn about how it functions, various stocks brokers are there who register themselves with the companies which they represent. Anyone who wishes to invest in the shares or securities of a company needs to contact those share brokers, then move with the formalities, that is opening a demat account, placing an order, the transactions takes place, and finally settlement. And so there is a long process. We would see it in the coming time or in the next lecture. But as of now, it is a secondary market which provides trading in already listed securities that have been issued by the primary market. It also provides a continuous market. Means buying and selling can be done on a continuous basis here. So if on the basis of this discussion we are like to analyze, or we are supposed to analyze the feature, then we can say that it is a market for the securities. First, the first feature is that stock exchange is a wholesome market where the securities, these long-term securities, these securities may be either of government or maybe of corporate company or of semi-government, or they are of some organizations that are bought and sold. So first, stock exchange is a security market. Second is that in a stock exchange, trading is done in second-hand securities, be it bond, be it shares, or be it some debts like debentures. They have already been announced and issued by the company, previously directly offering the opportunity to the investors to make investment. And we have seen what are the process, how a company issues securities in the primary market. It may through prospectus, that is known as IPO, or there may be e-IPOs, there may be private placement, there may be offer for sale. So this all we have discussed. So these are the issues in the primary market. In the secondary market or in a stock exchange, the feature is that it deals in second-hand securities. There is a continuous market where purchase and sales is being done. Trading is done, buying and selling of the securities which has already been issued. Now if we see over here, then this stock exchange, as we have seen, it also regulates. The one of the feature is that it regulates the trade in securities. The securities that are bought over here or that are sold over here, the exchange or buying and selling of these bonds, these shares, they are on their own account. The exchange does not sell and buy bond on its own account. Rather, there is a broker, I have said, there is a middleman through which the transactions takes place, the exchange takes place. So, these broker or exchange, they trade on behalf of the company, as just I have now said, that there are various traders, brokers, who act on behalf of the company, dealing in the shares or securities of different companies. So whenever an investment or an investor wants to buy the shares or securities of a particular company, he need to go for or be in contact with the trader or the broker of a particular security. So here what we find, it regulates. It is not that anybody can sell. These stock brokers, they are registered with the company. They are listed in the list of brokers with SEBI. And the place of their exchange is also mentioned. So what we find, that these dealings in registered securities, the stock broker, they deal only in registered securities, the securities which are listed in the stock exchange, and they represent some company. So when they deal in a security, they trade on behalf of the security, on behalf of the company which have issued the securities. So these securities which have already been issued in the primary market are traded over here, and that also through a registered broker. There is safety of the transactions. The transactions takes place only through the broker who is registered in a stock exchange. No unknown person can be let to trade in a stock exchange unless they are registered with a company to deal in their securities and act as a broker in a security market, that is stock exchange. They cannot do so. So therefore, there is a safety of transactions as well. To remember or to quote it otherwise, these dealings in the security exchange or stock exchange, it is recognized by the government authorities. There is a proper authorities which recognizes the act of dealing in securities. So they are a legal act or legal transactions relating to financial market. So these are all the features that we discussed. Now coming to the functions of stock exchange, we know how great important it is, or what a important role a stock exchange plays in a company or in a economy. Apart from making finance available or making capital available for a firm, for a business, there are various other functions that a stock exchange functions. The first functions of stock exchange is providing liquidity and marketability of the securities. Now, what is this marketability and liquidity of the security? Now, this refers to that the securities that have been already brought by the person, by the investors in primary market. Now, if they want to disinvest their shares, their securities, what would they do? How they can disinvest? How they can convert their investment to cash? So this stock exchange, they provide a mechanism that the existing investors can disinvest their securities, the money which have been invested in securities, and new investors, and allows new investors to buy the securities or make investment in securities. So main function of stock market, what we find over here is that it provides a ready market for purchase and sale of securities. The presence of stock exchange, they gives an assurance to the investors that the investment what they have made, it can be converted into cash whenever they want. That is the one meaning of liquidity. They can be converted into cash as and when they want. Then the investors can invest in a stock exchange, long-term investment, without any hesitation. Without any hesitation. Because at any moment they can disinvest it and make investment in either short-term or in medium-term investment. So there is a marketability as well. Securities, smooth selling and buying without any hindrances, without any obstacle or hindrances of time. So there what we find is the ready availability of a market which promotes the buying or dealing in securities. Then the second function is pricing of securities. This pricing of securities, we know, pricing refers to how the price of a stock or a security is determined in a stock market. What we find, we know in economics we have heard about the forces of demand and supply. So the forces of demand and supply, they help us to evaluate what is the value of a securities in the market. Generally what happens, how market influence or how the demand and supply is influenced, the securities which are either of profitable nature or which have a tendency of high growth or having a high growth orientation, such securities tends to have a more demand or a greater demand in the market, in a security market. So what we find that these securities, this type of securities, they commands or they attracts the investors, creditors, as well as the government also. People tends to invest in these securities which offers them an opportunities of growth as well as greater return in terms of profit. So the demand for such securities tends to be higher, and we have seen a demand, the goods which tends to have a higher demand commands a greater price. So therefore the forces of demand and supply act over here in deciding the price of a securities. The evaluation is also made by stock exchange, and the information relating to evaluation is being spread among the investors, among the prospective creditors, among the government, about the credit worthiness of a particular securities in a market, about the performance of a securities in a market, about the trends of a securities in a market. These factors taken together influences the demand and supply and hence price. Therefore, stock exchange also provide a mechanism for pricing of the securities. They determine what could be the price of a securities based on the demand and supply. Then the third factor is safety of the transactions. We have just discussed how a stock exchange help in safety of transactions. We have discussed that the stock exchange promotes trading only on behalf of the companies, by the traders, by the brokers who are registered with the stock exchange. The person who act for trading as a broker, and if he is not registered, if you do not abide by the rules, regulations, the procedure that is led by SEBI, then they are not allowed to trade in the market. In a stock market, secondly, only listed securities are allowed to be traded in. Listed means once the securities are issued in a primary market, they have to be listed with any stock exchange. That was the process in the issue of shares, how shares are issued. So, first of all, there is a bar that only the securities that are listed in the stock market can be allowed to be traded in. Now, there is a stringent check about the worthiness of the company, about the credit standing of the company, about the viability of the company project taken or undertaken by the stock market authorities, and then it is allowed to be listed in a stock exchange. So it is not that anybody can apply for enlisting their securities and market and can be enlisted. There is a rigorous process which a company has to undergo before its securities are listed in the stock exchange. The stock authorities, they analyze the project, the viability of the project, the credit worthiness, and then the shares are or the securities are enlisted, and then they are allowed to trade in the stock exchange. So the soundness of the company, the economic viability of the project is being evaluated, and then they are allowed to trade in. Second thing is that, be it the stockbroker or the company, they have to be operate within the rules and the regulations that are being framed or that are being listed, directed by SEBI. Therefore, this ensures safety of transactions, or we can say safety of dealings. Then the next one is we have mobilization of SEBI. Now, what is this mobilization of SEBI? We know that an individual tends to save out of the income that one has after meeting out its expenditure in an economical manner. So the surplus fund that an individual has, a company or these organizations, they provides an opportunity to invest in a securities which has already been issued in the primary market. So what we find that the savings of an individual, it moves from the person to the investment opportunity that is being provided by the companies. So what we find that the savings or the amount which has been said, the surplus amount that lies with an individual's, those surplus amount can be directed towards those securities which provide high returns and which are growth oriented. So there is mobilization of SEBI. Then we have, there is spreading of equity cult. Now what this meaning is spreading of equity cult? It must be noted that the stock exchange, it assists in dealing in securities. Now how does it assist? We find that stock exchange also provide various types of education and information up to the investors about the securities. They not only teach or rather inform them about securities, but what is the benefit of investment in the securities? how the benefit can be availed, what are the risks involved. All this are being informed, or they are being let known to the prospective investors. So here these information and these habits, or this act of assisting, they helps to a stock exchange to regulate new issue, then lay down a better trading practices, as well as it educate the public or the investors about making investment. So spreading of equity cult means, it simply refers that there is a habit, or there is a process by which the prospective investors are informed, they are educated, or they are let known about the investment opportunities and the prospective benefits. So that is about spreading of equity cult. Cult means a culture. Then we have providing scope for speculation. Now this is the crux. Every stock exchange, there is a scope of speculation. Speculation means making some guess in anticipation about the behavior of demand and supply of securities. What would be the supply of securities? What would be the demand of a securities? And how these will affect the dealing in the securities. So there is speculations that takes place in a stock market or a stock exchange. Then last is promotes the habit of savings. This habit of saving, in the sense that the stock market, it provides, there are different securities that are listed. Each securities represent an investment opportunity. So there are various viable portfolios of investment or opportunity of investment in various types of securities. The attractive opportunities, they invest, they excuse me, they encourages the people to save and make investment in those opportunities. These opportunities may be by the corporate sector or by an associations. But what is the chief thing is that there are opportunities of investment offering a higher return. So as per human tendency, those who like to multiply their money, stock market provides a very good opportunities, and this in turn influences their habits of saving. So these are all the functions of stock market. I would like to add over here that stock market is often referred to as an economic barometer of an economy. What is the meaning of economic barometer? You know, in a major economy or every economy, the activities in a general market influences the trading in the securities or the trading in the securities market, stock exchange. So these changes in the general market, they tends to affect the price of the securities in the stock market. Now these fluctuation in the price of the securities, they refers to different phases of market activities. It may be a period of boom, it may be a period of recession, or phase through which a company is passing through, and hence the price of this security are affected by the condition in the general market, what it experiences. Therefore, it is rightly said that stock exchange is, or it acts as a barometer, economic barometer of an economy. So here we comes to the end, and this is all about stock exchange and its function. Keep learning.